Think and Grow Rich has remained influential for nearly a century, not because it teaches specific investment tactics, but because it focuses on the one factor that outlives every economic system: market cycle and technology, the human mind. Napoleon Hill did not study millionaires to learn what they bought or how they invested. He studied how they thought, how they sustained belief, direction, and discipline long before results appeared. The book's power lies in its assertion that wealth is first a psychological achievement before it is a financial one. At the center of Hill's philosophy is the idea of a definite purpose. Millionaires in Hill's research were not vague about what they wanted. They had clear goals, specific visions, and unwavering focus. This clarity created direction. Without it, effort scattered. Hill argued that most people fail financially, not because they lack ability, but because they lack a clear target that organizes their decisions. Purpose acts like a filter, guiding which opportunities to pursue and which distractions to ignore. In modern terms, this is about intentionality in a world overflowing with options. Another foundational concept is desire backed by commitment, not wishful thinking. Hill made a sharp distinction between wanting something and deciding to pursue it regardless of obstacles. The millionaires he studied treated desire as a contract with themselves. They were willing to endure discomfort, delay, gratification, and persist through repeated failure. This is not motivational optimism. It is behavioral resolve. Hill's lesson is uncomfortable because it removes excuses. Desire without action, planning, and sacrifice produces nothing. Faith, one of the book's most misunderstood ideas, does not mean blind belief in outcomes. In Think and Grow, rich faith is confidence in process. It is the ability to act consistently before evidence appears. Hill observed that successful people maintained belief during periods where external validation was absent. This allowed them to continue working when others quit. In modern language, faith is psychological resilience under uncertainty. It prevents abandonment of long-term plans due to short-term discomfort. Hill also emphasized the power of autosuggestion, the practice of repeatedly reinforcing one's goals and beliefs. This idea is often dismissed today, but its core insight remains valid. Repeated thoughts shape behavior. Behavior shapes outcomes. Millionaires consistently aligned their internal dialogue with their external goals. They did not rely on motivation alone. They trained their attention. In a modern context, this is about managing mental inputs, limiting negative narratives, and reinforcing discipline until it becomes habit rather than effort. Another critical element in Hill's framework is specialized knowledge. He argued that general education alone rarely leads to wealth. Instead, millionaires develop deep expertise in specific domains and apply it practically. This aligns closely with modern observations. Wealth tends to accumulate around people who understand a niche better than most and apply that understanding repeatedly. Hill's insight is not anti-education, it is anti-complacency. Knowledge must be actionable and continuously refined. Perhaps the most overlooked lesson in Part 1 is the emphasis on persistence. Hill documented that many fortunes were made only after repeated failure, rejection, and long periods of apparent stagnation. Persistence is not stubbornness. It is disciplined continuity with feedback. The difference between success and failure often came down to who quit last. Hill's millionaires were not immune to doubt. They simply refused to let doubt decide for them, because the true test of Hill's ideas is not whether they sound inspiring, but whether they can survive contact with reality, doubt, and time. Part 2 is about translating mindset into behavior without falling into the traps that have caused Think and Grow Rich to be misunderstood, misused, or dismissed by critics who confuse discipline with fantasy. One of the most common failures in applying Hill's philosophy is mistaking positive thinking for disciplined action. Hill never argued that thinking alone creates wealth. He argued that thought directs action. Without action, mindset becomes self-deception. Many readers repeat affirmations without changing habits, skills, or decisions. The millionaires Hill studied did the opposite. They used mindset to fuel consistent behavior learning. Selling, building, failing, and adjusting. The lesson is clear. Belief without execution is delusion. Belief with execution becomes momentum. Another critical clarification involves faith versus denial. Faith in Hill's framework does not mean ignoring evidence or persisting blindly. It means continuing to act while uncertainty exists. The moment evidence clearly contradicts a plan, faith demands adaptation, not stubbornness. Many who fail with Hill's ideas cling to broken strategies in the name of belief. The successful individuals Hill described changed tactics frequently while holding purpose constant. This distinction matters. Purpose is stable. Methods are flexible. Hill's emphasis on autosuggestion also requires modern reinterpretation. Repeating goals is not magic. It is attention management. What you consistently focus on shapes the decisions you notice and the actions you take. In today's environment, autosuggestion is less about affirmations and more about controlling inputs, what you read, who you listen to, and how often you expose yourself to fear-driven narratives. Millionaires protect their mental environment deliberately because they know motivation decays in hostile conditions. Mindset is maintained, not assumed. The principle of specialized knowledge becomes even more relevant in a world flooded with information. Hill warned that general knowledge does not create wealth. Modern markets confirm this. Success concentrates around people who understand a narrow domain deeply and apply that understanding repeatedly. The mindset of millionaires is not knowing everything. It is knowing what to ignore. This selective ignorance preserves focus and prevents dilution of effort. Another misunderstood idea is Hill's treatment of failure. He did not glorify failure. He treated it as feedback. Failure becomes useful only when examined honestly and integrated into improved behavior. Many people romanticize struggle while repeating the same mistakes. The millionaires Hill studied used failure to refine their approach, not to validate suffering. Persistence without learning is wasted effort. Persistence with learning is compound interest applied to behavior. Hill also emphasized the importance of alliances and mastermind groups, a concept often reduced to networking cliches. In reality, Hill observed that wealthy individuals surrounded themselves with people who challenged their thinking, complemented their skills, and reinforced discipline. This was not about motivation alone. It was about accountability and perspective. Isolation amplifies delusion. Intelligent collaboration reduces blind spots. In modern terms, this means choosing environments that sharpen judgment rather than flatter ego. Perhaps the most uncomfortable application of Think and Grow Rich is its demand for personal responsibility. Hill placed responsibility for outcomes squarely on the individual. This does not deny external obstacles, inequality, or luck. It removes the option of surrender. The mindset of millionaires is not believing the world is fair, but believing that agency remains regardless of conditions. This belief sustains effort when circumstances are discouraging. Without it, long-term goals dissolve at the first serious obstacle.